Well, we heard from analyst Ari Zoldan, the CEO of Quantum Media Group, in that story, and he joins us again now live from Orlando, Florida, for more insight into all that's happening with the Walt Disney Company. Welcome back to the show.
Great to be back.
So as we saw, Disney's Investor Day seemed like it was called off last minute to be replaced by this other event that's going to be including their full fiscal year results in November. Is this any indicator at all of whether Disney is still an attractive investment or not?
No, I mean, I think right now, an investor day would be a bad time for it. I would have called it a crisis communication day. But right now, obviously, Disney, along with everyone else in the space in this entire economy, is suffering. So I think that right now their focus has got to be on the employees right now, those 28,000 employees that have been laid off. The company is sitting on a lot of cash. They are investing in digital assets, which I don't believe necessarily they should be doing now. And their full focus really should be retaining those employees in some fashion.
And I know that when you look at sort of what Disney is bringing in and you look at the size of the empire, it can be a tough pill to swallow for those 28,000 people being laid off. Now, the company did say that this was the only feasible option. How is Disney justifying these layoffs?
Well, it's hard. I mean, the market cap of Disney, is $222 billion. The company generates about $69 billion. 37% of the revenue last quarter was Disney, was their theme parks. I think that they are taking the proper steps to be able to act in a very lean and mean way, but at the end of the day, the company is a very, very rich company, and they have to pull back on their investments. They have to focus on figuring out how to retain these employees. I'm here in Orlando now, and it's a complete ghost town. And it's not only the park employees, but it's the economy that's surrounding the parks as well, and they're suffering too.
Now, I want to look at Disney's focus because last year on Investor Day, the company was hoping to have about 60 million new Disney Plus subscribers by 2024. They actually hit that target already this summer. So now some of these new estimates has Disney Plus on track to surpass 155 million subscribers by 2024. What are the biggest factors driving all this subscriber growth?
Sure, it's content. I mean, they were off to a great start. They're producing some incredible content. They've got a great built-in audience already. I mean, they own a media empire that they could just tap into, including the ESPN, ABC, Pixar. So they've got the digital footprint. They've got the creativity, the studios behind them, and they're really producing engaging content. At the end of the day, that's what's going to drive eyeballs.
Now, just how far-reaching is Disney's business empire across these different ventures, and how much are we talking here altogether?
We're talking about 50% of their portfolio is made up of media assets. So the media assets include ESPN, ABC, Pixar, Marvel. I mean, the list just goes on and on and on. And the balance is various pieces of different businesses, including the parks business, which represents about 37% of their portfolio.
Now, what are your thoughts on activist investor Dan Loeb calling on Disney to end its $3 billion annual dividend and instead use those funds for Disney Plus content? Is that the better use than the current strategy?
I would probably take those dividends and figure out how to get those people back employed. I mean, I love Disney Plus. I love what they're doing. I think those numbers are gonna triple over the next couple of years. But $3 billion is a lot of money. So I'd be looking at figuring out how to get those dollars back into the hands of some of the unemployed.
And so then explain Disney's business model now and how it's evolved over the years and perhaps how it could adapt to some of these layoffs and perhaps reinvest in these employees.
Sure. The park was established in 1955 as a park. Then it became an experience. It became a culture. Then they started buying different digital assets, which included studios. And the empire started to grow, wrapped in this culture of everything Disney, from Disney cruise lines to shows to apparel. And the brand keeps expanding. I mean, the brand equity alone, is worth an enormous amount of money just on the licensing side. So the company is going to continue to expand. I do have a lot of confidence in both management and also the company. Unfortunately, it's a sign of the times right now. The stock right now is, after hours, I think, is trading at about $120 per share. I still think it's slightly overvalued, but if you're a Disney fan, you're going to be in Disney.
All right. Well, thank you. Always good to have you on. Ari Zoldan there, CEO of Quantum Media Group.